Hello, I'm Andrew White, Associate Editor of the Australian newspaper. I'm here with Luke Sayers, Chief Executive of PwC Australia, as part of our Critical Issues series. Luke, you've spent some time working abroad, including a stint in Washington. Here we have a fairly fierce and relentless debate about the state of the economy. Drawing on your experience abroad, how do foreign investors see Australia and how does it differ from how we might see ourselves?
Yeah, look, Andrew, my perspective on that would be that overall, Australia is still seen as a very stable, solid sort of country to invest in and to do business in. And it probably has dropped off over the last decade or so a little bit. But overall, when you look at other countries around the world, you'd still have to say Australia is a very, very solid, albeit low growth sort of jurisdiction. I would say that, and I had the good fortune of meeting a number of investors in Singapore not too long ago, where I hosted a conversation over lunch around Australia as an investment vehicle, investment country. And these individuals were all billionaires in their own right and are either significantly invested in Australia already or are looking to invest in Australia. And the conversation was, I guess, two things. The first one was Australia is very solid, albeit low growth. But what did surprise me was the second part of the message to me was Australia is too difficult to do business with. And by that they mean with regard to the labour laws, by that they mean with regard to the sovereign risk sort of challenges that have emerged here over the last 12, 24 months. By that they mean sort of like a changing of rules from time to time that create uncertainty. And I guess they were saying, you know, it needs to start, Luke, at the top of the tree. It needs to start with the Prime Minister, it needs to start with the government, and those individuals and those bodies need to be out and about talking to different countries about a stable environment, albeit low growth, but one that is not going to change once investors put their money in. And so I'd sort of pull that together by saying strong, solid, but under significant pressure over the last couple of years vis-a-vis its competitiveness to other countries. It was wrapped by one of the gentlemen saying, Luke, let me just boil it down. If you got to invest in Australia, or you got to invest in China, India, Brazil, Russia, Vietnam, etc., where would you look to place more of your portfolio rather than less? And the upshot was more would go to those more emerging Asian sort of markets and destinations, and less would go to Australia, and also less would go to Europe and the US.
And do costs emerge a lot as a significant issue or a barrier to people investing here?
Yeah, absolutely. Costs, but not just costs in isolation. It's more the costs plus the uncertainty of the rules, regulations, changing sort of patterns, and I guess the ability to get the best returns vis-a-vis growth from Australia as opposed to some of those other countries. So costs is one, but it's not just costs, it's a broader tapestry.
Yeah. As you mentioned, there has been a significant re-regulation of many aspects of business behaviour in the aftermath of the GFC. Do you think governments are hitting some of the right notes on that, and how are businesses coping with the pace and volume of that re-regulation?
Yeah, look, the good news is when the GFC hit, in Australia we were all celebrating that our banks were very well regulated and very well safeguarded, and to be honest, a big part of us coming through that so strongly was that we did have a very, very robust regulatory environment in place vis-a-vis our financial services and capital markets. So I think on the one hand that's really a good thing. But what has happened over the last number of years is more and more regulation that is coming at business in a very disjointed sort of way. such that business is struggling being able to join the dots across the whole regulatory landscape. It's very piecemeal, and therefore business is saying, are we actually achieving the objectives of all of this regulation? And when you know as well as I do, when you as a homeowner are suddenly exposed to a whole bunch of different sorts of regulatory interventions, you start to say, well, this is time consuming, this is costly, to what end is all of this sort of red tape? Are we achieving the objectives that were first set out to achieve? And so the way I would say it is that I think there is uncertainty as to whether or not all of the various drips and drabs of regulation, is it going to achieve the overall objective? And what is that overall objective? And I think we are a little unclear at the moment around what is that overall objective.
The regulatory concerns are one issue, but at a broad brush, the economy in Australia would seem to be in fairly good shape. You've got low unemployment, pretty low interest rates, low government debt as a percentage of output.
Yeah.
Drilling down into some of those figures, do you see causes for concern that we should be perhaps worried about and looking to address?
Look, I think that's a fair snapshot today. All of those indicators are right, but I'd challenge all Australians to sort of go to that next level to truly understand the underlying data. For example, if you break Australia down and look at it state by state, there are very different pictures in Victoria and New South Wales as opposed to Western Australia and Queensland. And so what does that mean? And what are we doing to accelerate in those sort of new world states, the resource-rich states versus sort of the old world states of Victoria and New South Wales? I'd also say that if you look forward over the next 5, 10, 15, 20 years, and I know this as a parent, I do worry about what it means to the next generation of Australians and the next generation of Australians. And I say that because we simply today cannot afford to do all of the things that are constantly talked about. We cannot afford NDIS and an education reform and infrastructure and we just cannot afford it because the revenues that we're collecting from taxes is diminishing. And how are we going to afford all of this? The only answer to this is if we lift productivity. And do we see from a broad market perspective a lot of innovative ways with the use of technology and labour laws and so on to really accelerate productivity? No, we don't. So what I would say is, unless we can lift our productivity as a country, unless we can figure out an answer with regard to tax mix and tax effectiveness, unless we can figure out our Asian relevance for the next 20, 50, 100 years, I do worry for my children and my children's opportunities being a part of an Australian country.
Yeah, you mentioned potential tax reform. The Business Council of Australia, I think, recently said that in preparing for the budget, the government should be looking at a whole lot of areas and perhaps where they can reprioritise spending, maybe review some of the programs that have been in place for a long time and whether we still need to have those so that they can afford NDIS. Is that something that you think needs to be done, a more holistic review of?
Absolutely. And we've tried for a long period of time. We've tried, and what happens is a lot of good thinking starts to happen and then it becomes political. And as a country, I think we've got to find a way to break through the politics of what is right for this country. But that takes real leadership and that takes real determination, and it's massive from a change perspective for Australia to be able to break through and set up a whole new tax landscape. But I do believe, I'm strongly of the belief that tinkering with the edges and changing 2 or 3 of the tax levers as opposed to looking at the 150 different state and federal taxes that we have today is not going to get us to where we need to get to. So I'm fully in support of that.
Yeah. Another of the big changes that we've seen through the global financial crisis is initially a lot of job shedding in some sectors and now a fairly consistent tightening of the labour market. I'm wondering, people don't seem to have much difficulty finding jobs if they're moving from one sector to another. But we're also having a lot more discussions about how we can improve the advancement of various groups through the workforce. I'm wondering what sort of challenges does that throw up for organisations in Australia?
Yeah, so look, there is no doubt the war for talent is one of the mega trends that all organisations are confronted with. I know at PwC, we employ some 6,000 people here in Australia, and it's well and truly up there as a priority for us as an organisation, because the needs and the demands of the individuals today is significant, and the needs and the demands from the business angle is also significant. And so what you have is topics such as agility of workforce being played out very, very seriously. How do you move people to those geographic locations where there are significant opportunities? So to come back to the earlier example, how do we move people from Melbourne and Sydney to Perth and Brisbane, and not just Perth and Brisbane, but out into the Kimberley and so on and so forth. And so we must find ways to have a very agile workforce. The second piece that we're very much looking at is the flexibility, and how do you have a flexible dynamic workforce. Gone are the days of sort of 9 to 5 and don't leave your desk and don't leave your office. More and more people are looking for, in the value proposition, a flexible working environment that is output based rather than input based. So how do you use technology to enable that? How do you change the culture of organisations such that managers are supportive and encouraging of that different sort of work environment, as opposed to sort of the old world, which is I want to be able to look outside my desk and there are the people doing what they need to do. So agility and flexibility are front and centre. And the final point I'd make is technology. And again, I'm sure you know this, but the generation that's coming through are so much more technology literate than we are. And how do we encourage, accelerate, promote new advancement in technologies in the workplace to enable greater productivity, greater output and greater performance? And I think a lot of organisations really struggle with that, because we are just not ingrained like that. And so most times we will look at the cost side of it. Well, it's going to cost X to actually implement the latest technology, the latest software, the latest hardware, as opposed to, hang on a minute, this is where the world is now. What are the benefits that we can get? Benefits versus costs. We should be making those investment decisions. So they'd be three key messages I'd outline for you.
Terrific. Luke, we're going to have to leave it there. Thanks very much for your time.
Great.
Been talking with Luke Sayers, the Chief Executive of PwC Australia, for the Critical Issues series. I'm Andrew White. Thanks for watching.